What is more important these days when asking about the housing market? Because in the housing market, we are seeing purchase prices come down, but which is more important, the purchase price or the monthly payment? Because I'm gonna go ahead and give you a little heads up here. Instead of having to fast forward to the end of the video, I'm gonna let you know that monthly payments are going up. And people are still buying houses even at a higher monthly payment. Thus, the market is having to correct their housing prices by coming down a little bit. Let's go ahead and see what we're talking about here. Let's dive in a little deeper. And we won't be able to go into everything because this video would be 1,000,000 minutes long and we just don't have that time. But first here, let's go ahead and step by step. Someone comes across this beautiful home that they see in downtown Tacoma off of South 23rd, and they think, wow, this is gorgeous, and it's been on the market for a while. And I'm wondering, well, what would they take for the home? Because I'm seeing that houses like my neighbor's house just sold for a few $1,000s less than what it was on the market for. So what's going on here? Should I even buy a house because the market seems to be going down? Is it even a good time to buy a house? Well, yes, it is, because the reason that prices are going down a little bit are because the monthly payments are going up. Let's look at this estimated monthly amount here. Now, where we are is homesnap.com. Homesnap.com has this wonderful estimated mortgage payment calculator. You can even go deeper into the affordability and yada, 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 but let's stick here for a moment. So if the house was purchased for $375,950 and you had 20% down at a 4% rate, which this rate is now more like 6 to 7. And so see how that just shot way up? So a few months ago, people were able to get this 4% rate. And so their home, this monthly mortgage payment was about $18 to $17. And that's before we even add the HOA fee. Let's go ahead and add the HOA condo fee here, which is $411 per month. And where you get that is when you scroll down on HomeSnap on the listing, scroll all the way down to where you see the features tab here. Features tab, go ahead and click it. Oops, not that one, sorry. Click it. And then scroll down just a little further to where you see Condo Co-op Association info. HOA fee is $411 per month. We're also gonna have tax info here per year that we're gonna come back to. So let's go back to the calculator and make sure that we have the 411 in there, and we also have the 3324 property tax. And now we're looking at, for the same condo, it's a townhouse, but for the same condominium, same townhouse, anything with the HOA on there, for the context of this video, that purchase price with 20% down at 4% is $22.28. And that was kind of comfy for folks who had 20% to be able to put down, and they're like, okay, yeah, well, I'm downtown, I've got this big, beautiful home, and that's my monthly payment. But what's happened is interest rates have come up. And so instead of having that instead of having just shy of $2,300 a month, now people are looking at, oh my goodness, just shy of $2,800 a month. That's $500 more before. And some folks can get, let's say, 6.3%. Let's say, I think I saw that recently, 6.3. And so that payment is now $26.54 per month, even with 20% down. And let's say that someone can buy down their rate to a whopping 5.5, which is really difficult to do. But let's say let's say you're even able to do that. You have like perfect credit, perfect everything, and blah, blah, blah. We're looking at $2,500 a month. But some folks don't have 20% down. They only have, let's say they have to utilize down payment assistance, and their interest rate is high. Now they're looking at over $3,000 per month. And that's where we're seeing why housing prices are having to come down to get buyers to actually buy these houses. Because if you were to come down, let's say to $300,000 with 7% and 5% down, with 7% interest rate with 5% down payment assistance, now we're looking back at that $26.88 per month for $300. But if we were to get rid of this 411 here, now we're looking at, there we go, $22.77 per month. So someone who's looking for around that $2,000 to $2,500 per month range may be wanting to look for a home in Tacoma that doesn't have an HOA that is much lower priced. The South End has a lot of homes May need to go to Parkland, may need to go to Monato, may need to go somewhere else, but you may be able to find something and get your foot in the door, because here's how people are still buying these houses. People are wondering, where in the world is all of this money coming from? Let's just reset this here. So original purchase price for $375,950. Let's say that, before we come up to this down payment, let's go ahead and get back to that 7% just to be super conservative. Most folks are getting interest rate right now underneath 7, but we're just using that for conservative sake, and we have $411 per month for the HOA. Now we're up to this 27. Now, how in the world are people paying that? Well, here's how. Someone, basically, let's go ahead and open up this calculator here. Whoop, let's move that here. And let's say that someone purchased their home in 2017 for, let's say, 130. Actually, you know what? I'm going to use a specific example. Someone bought a condo for $115,000, $115,500. They purchased that in 2017. Now that same one-bedroom condo is a few months ago was $250,000. More than that, actually, but let's just use the $250,000. And let's say that that since a few months ago, the housing market in Tacoma has come down about 4% here, which is about 10 grand. Okay. So now we're looking at the same condo for $240,000. Now it costs about, let's even use, let's just use that number. Times 0.91, that's a good estimation about what you would walk away from the sale after paying taxes, escrow fees, commissions, yada, 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 yada. The cost to sell the home would be you would walk away with about $218,000 minus what is owed, which let's say they still owe the same amount as when they purchased it. They now have $102,900 to put down. Now let's just say they're like, hey, we could go ahead and have that $2,000 for a nice little vacation. Let's go ahead and put our 100 grand down. So now they're looking at 27% for the same purchase price, and the monthly mortgage just went down a little bit because they're able to put a higher amount. Now some folks have made a lot more than that in Tacoma, and let's say they're able to put down $150,000. And so now they're getting the monthly mortgage down to where the comfy amount is. And then just to get the extra, let's go back to this $100,000 just for the sake of this example. And let's say, hey, we really need this to come down a little bit. Do you think that instead of full price, would you be willing to take $360,000 for it? Oh, well, now we're still a little bit above 25, so let's see if they would take $258,000 for it. Okay, maybe a little $257,000 for it. Okay, maybe $256,000 for it. There we go. So let's see if they're willing to take I kept saying $256,000. I'm going to say $356,000. I'm sorry. So let's say that they're willing to say, hey, I'm going to go ahead and purchase this at $356,000 instead of $375,000 to get the monthly mortgage to be about the same, which is actually still more expensive than what it would have been at the full price amount. See what we're doing here? Now we're playing with these numbers. This is fun. So before, if it were just a few months ago, and someone was able to put $100,000 down and get a 4% rate, they could purchase the house for what they're asking for and still come out with $2,109 per month, which is it's a little over $2,000 a month for this beautiful downtown home, right? So that's what we're looking at. So yes, even though housing prices have come down a little bit, the monthly payments have still come up. And our market is now a move up market where you sell one property, utilize the equity to throw down on the next one to still have an interest rate that is almost twice as much, but still be able to keep your monthly payment down. And yeah, you may be spending $100 more per month now than what you would have a couple months ago. right? But so to get the numbers right, that's what we're seeing. Okay, so I hope that makes sense, folks. So if you thought that your home was probably going to sell for, let's say $380,000, let's minus 356. Just knock off about 25 grand. You know, this number right here is 24, obviously, but just take down about 25 grand off of the price of your home of what it was a few months ago, and start there. Just kind of know that, yeah, your house is going to be worth a lot less, but the person who's buying it is going to be paying more money, thus meaning our market is still a-okay because people are still buying homes at higher monthly amounts. So once we see this market kind of just level out a little bit, people are still paying more per month, which means that the housing prices may go back up. As soon as interest rates stop going up, that's what we're seeing to be anticipated. Now, we won't know about tomorrow until tomorrow comes, but that's being a human being. We take the past data to help predict the future, fully understanding that none of us actually knows the future. So I'm wondering what your thoughts are. Comment below. We are all smarter together than we are alone. So go ahead and give your insight. What do you think? And are you in a position where you think that you might be able to buy something? Get out of that rental, because rental prices are going up as well. Yep. So why not just buy something and get that equity, even if it's a 1-bedroom condo, then in a few years you're able to sell it, get that equity, and buy that 2, 3, 4-bedroom house. All right? Have a wonderful day. Namaste.